Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, January 26th, 2016. So it's kind of crazy because I don't have a whole lot to add to what I've been saying, even though the S&P was up 26 points today. And the reason why is we haven't made a new high, we haven't made a new low, so we're still kind of trading within this range. It would make more sense if we continue higher, but it's going to be one of those things where once we start making a higher high from what we made on Friday, we are going to start getting bearish divergences, very similar to something like this. So the long side right now is, as you know, I've been looking long all around here. It was a little early, but still ended up doing pretty well on, the SSO trade. But the problem is that once we start making these new highs, I probably am going to be looking to the short side, because we're going to be getting pretty close to the oversold level, overbought levels on the SMI. We're going to get the bearish divergences, and from there we're going to start running into these resistance areas. So the bulls really, yesterday's decline closing down there put themselves in a little jam because all the technicals are now moving down as well. So if they can push through the 1915, like I said, nothing really changed. The next spot's going to be the 1929. Above that, then we're looking at the 1940, 1950 area. But again, do I think it's going to get up here with the bearish divergences? That's another 40 points higher. I'm not sure about that. If it did, I can turn around and make perfect sense of it, because it would just be your A, B, and this would be the wave C. The problem is that I don't know if it's going to be able to go that high with the the divergences that we have in place right now. So let's just do this. If the the bulls, what they really need to do is push it through this 1911, 1913 area. That will open a door for the move up to the 1929. If they push through it, then hey, we look pretty good for the move up to the 1940. Again, well, is it going to happen in a quick, in a one-day time period or two-day time period? We'll have to wait and see. But in any case, these are the resistance areas, and my kind of take on this would be, if we start getting up here, start just layering a little bit more out of the SSO or the long position. Maybe run with 100 shares. I only have 250 left right now after closing the other 250 up here. And maybe leave 100 open with a stop here. But really, what I would probably prefer is once we get up to some of these levels here, either just put a really, really tight stop on the SSO or take it off altogether and wait for things to start running out of steam, and then jump on the SDS, which is the short side of the spiders, and look for the move that would be heading down, because we're going to get the sell signals on the 60 minutes. So if we take a look at the 15-minute, again, nothing really, this pullback made it down to almost to 38% retracement. If we start making new highs, real good shot, we're going to get sell signals on the 15-minute. So we have the open gap, that's at the 1920. This will be your first stop we want to watch. And then again, above that, the 1934. So, anywhere in these areas here, like I said, I'm probably just going to, take my profits and, and step away. Now, if they head lower tomorrow, I really would like to see them keep the S&P above the 1884. If they go above that, if they go below that, then we're looking at the 1876, 1872 again. And again, I don't, I'm not sure if I really want to ride all that out on it, but if they, things work out as planned and they do get that last push up, maybe it's early tomorrow. These are the areas I'm going to start bailing out of the long side and start waiting for a short setup. Now, on the 5-minute chart, which is just the short term here, you can see we made it through the 78% retracement from this high to this low. So that typically implies that we have another push to the upside, and we're probably going to take these highs out. And again, our targets are going to be anywhere from this 1909, 1920, all the way up to the 1934. But again, once we're there, we're probably going to have the bearish divergences on all time frames, and that's not something that I really want to be rolling the dice on the long side, and I'd rather start building a short position. So that's really about it. We pretty much know our pivots right now. I'm still really neutral, but starting to lean a little bit on the bearish side, but I'm holding my long position, half of my long position, just because it would make more sense for another break above these highs to give us our bearish divergences on the 60-minute chart. So with that, have a great night, and I will talk to you guys in the morning.